Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And this week I want to talk about something that I'm sure is on equity investors' minds everywhere, and that is what the heck has happened to the market lately? And it's a reasonable question because the pandemic has been with us for 2 years, the Omicron variant for several weeks. We've had high inflation for months. We've known the Federal Reserve was going to raise interest rates for months. I've been saying in my writings, if you've been following them in Liberty Through Wealth, that by mid-year inflation should start to abate because it is caused in part by the global supply chain snarl. That's made it impossible for businesses to meet consumer demand out there. But there's another couple of issues. The first is that the federal government has massively overspent trillions of dollars. It's just too much money chasing too few goods, which is just economics 101, causes inflation. But in addition to that, the Federal Reserve has taken interest rates to zero. They've bought all this government debt that's come out that's helped suppress yields. All these things have been inflationary. And what has really alarmed people lately is interest rates are still at zero. The Fed is still buying billions of dollars worth of treasuries and mortgage-backed securities each month. Nothing has actually happened yet. So the Federal Reserve is behind the curve. That means that the Fed put is off the table. Okay. Now, what do I mean by the Fed put? Well, historically, investors have felt like the Federal Reserve has got their backs. If something really terrible happens, they're going to cut interest rates and make sure that the market doesn't fall too far. It's going to set a floor for stock prices. That isn't going to happen this time. Barring some emergency, real emergency, the stock selling off is not an emergency as far as the Federal Reserve is concerned. Unless there is some urgent emergency, the Federal Reserve is not going to protect investors by cutting rates because they're already behind the curve. And that is what has got investors so concerned. But before I get to why you shouldn't be terribly alarmed by the market action this week, let me just remind you that because market conditions and economic conditions do often change rapidly, I encourage you to sign up for my Liberty Through Wealth e-letter. It's absolutely free. Just click on the link below. The first thing I want to say is if you were happily buying a company's shares because of their business prospects a few weeks ago or a few months ago, and nothing has changed with the company's fundamentals, absolutely you can add to those shares at this price and reduce your average cost. I also want to point out that why is the Federal Reserve dead set on taking interest rates higher? It's not just because inflation is running hot. It's also because the economy is sound, businesses and households have very strong balance sheets, and the economic outlook is actually quite good. So those are all good things for corporate sales, corporate earnings, and corporate share prices. So I want to encourage you that even though we're likely to see more volatility in the near term, that the outlook longer term for stocks, as always, remains highly positive. Okay, well, that's it for today. This is Alexander Green with the Oxford Club. Make sure to subscribe to this channel, and I look forward to seeing you again soon.